Options trading, September 2023. We crushed the market this month. We beat the market by about 7%. If you have interest, you can enroll in the 7-day trial. It's only $19 for 7 days at beststockstrategy.com/memberships. We are fully hedged, and I believe that this is the best options trading product available. Again, you can visit beststockstrategy.com and enroll. Let's go through all of the trades and the alerts for this month. September 1st, S&P up 15. So here we did a 1 DTE. We picked up $125. S&P up 8. VIX down 3.5%. September 5th, Disney. You can see that we closed out the 70 by 60 put credit spread and financed it by selling some 91 call options. Those actually ended up expiring worthless. We collected 79 cents per contract. So if the calls expire, then we'll have a profit on the trade. S&P down 16. Closed out RTX. Rolled it from 83 to 81. Picked up a credit. Here we picked up around $60 of premium. Not a lot of premium. S&P down 19. VIX up 1.4%. September 6th, LMT. We sold the 280 by 230. Picked up around $200. Here we rolled down RTX from 81 to 80. Financed it by selling the 89 calls. LMT, small adjustment. SPX picked up $125. S&P down 31. VIX up 3%. September 7th, decent opening. S&P down 20. We sold calls in USO. Picked up around $200. Closing trade for TLT. The original is below. Fill for 28 cents. Bought back for 2. SPX picked up $80. S&P down 14. Volatility down very slightly. Small adjustment to Disney. Wanted to get rid of the position. New opening trade in SPX. Picked up $125. S&P up 6. VIX down around 3.9%. September 11th. Adjustment to RTX. We bought back the 80. We sold the 79. And then we financed it by selling some call options. New opening trade, picked up $80. S&P up 30. Volatility down very slightly. September 12th. Picked up around $200 in SPX. S&P down 25. VIX up 3%. September 13th. We made an adjustment to RTX where we rolled it out all the way to January 2026, the 40 strike. I would definitely take ownership of RTX at $40 a share. And what I'll do is I'll close out those $40 strikes over time, probably by selling some call options against it and then just simply picking them off one by one. GLD closing trade, bought it back for 8 cents, sold it for 34. Disney, adjusted the position. We have one more Disney put left. We closed out the 70 by 60 and then we financed it by selling some call options. SPX picked up around $140. S&P up 5, VIX down 5%. September 14th, S&P up 20, VIX down 2%. Here you can see that we sold some puts on VIX with a 12.5 strike. Small new opening trade, B plus grade. Here we picked up $300 of credit. S&P up 38, VIX down 5%. September 15th, decent opening. S&P is down 20. Here with VGT, we did a ratio spread. The NASDAQ was down around 1.6%, yet the account was saying that we were up around $20,000. And then I commented that that number isn't right. We aren't up 20,000 today. It's hard to know the true number because our hedges are so far out in duration that the bid-ask spread is wide and therefore the mid-price bounces around. But the larger point is that we aren't down money today. We are probably up slightly. So the S&P is down 50 and VIX up over 8%, yet we are up. It is important to hedge. Here we picked up $120. S&P down 55, VIX up 7.5%. Usually the VVIX will spike more during days like today. We open a new ratio spread in VGT. September 18th, decent opening. Here we picked up around $75, barely any movement today. S&P up 3. September 19th, S&P down around 20, VIX up 3%. Here we sold a gold strangle, picked up around $100. New opening trade in IWM, picked up around $39. For SPX, we picked up $160. S&P down 9, volatility is mixed. September 20th, we sold the 14 strike on VIX, picked up $123. Here I rolled in one of the VIX longer dated positions that I sold previously, and I rolled it into October 2023. S&P up 15, VIX down around 1.5%. New opening trade in Microsoft. Picked up a credit, that's a ratio spread. Here we picked up $250 for SPX. S&P down 42, VIX up 7.3%. VVIX up 5.4%. September 21st, we rolled TLT from 91 to 90, financed it by selling calls. Here I bought back the 14 strike on VIX for 9 cents. And then the original trade that I opened just the day before is on the bottom, where I sold it for $123 and then bought it back for $27. Ratio spread for TLT, B plus grade. IWM, I rolled it from a spread to a naked position, picked up a credit. I want to take ownership of it. Picked up $180 for the SPX strangle. S&P down 72, VIX up around 16%. Here you can see that even though the S&P was down around 72, we were up money on the day. September 22nd, TLT, we rolled that position from 90 to 80 and financed it by selling some additional call options. IWM, I rolled it down from 173 to 171. 2 small adjustments. Market is sold off. As indicated, during bear markets, the market is very weak over the last 2 hours. In March 2020, I remember vividly how often the market would be very strong. Then it would fall off a cliff the last 2 hours. As a result, when you're in that type of market, then it's often best to adjust any puts during the first few hours that the market is open by selling calls or selling calls outright to collect premium. SPX, we picked up $450. S&P down 10, VIX down 2%. Here we bought back VIX for 10 cents a contract or $30 in total. SPX, a ratio spread, picked up around $735. Here we open up new positions in TLT and also SCHD. Picked up $120 in total for TLT and $45 for SCHD. Picked up around $300 of credit for SPX. S&P up 17, VIX down 1.7%, VVIX up 1.3%. TLT, we rolled that position from 88 to 87. It actually would be worthwhile to take ownership of the shares for TLT, considering that just a few years ago, TLT was trading over 170 and now it's currently trading below $90. SPX picked up $300. S&P down 64. VIX and VVIX up 12%. TLT, we rolled it from 88 to 87. Small adjustment. Here we closed out the position. And here we rolled it all the way down from the mid and high 80s to 75. S&P is up around 11. IWM, we rolled it from 171 to 170. Here we picked up $520 on SPX. S&P up 1, VIX down 3.8%, and VVIX down 5.8%. Solid day for the market. Amazon, new opening position, we picked up $42. Then the market rebounded, so I closed out that position for around a 40% profit in just a few hours. Here I picked up $480 of credit. S&P up 25. Friday closing trade for IWM. Then new opening trade on Waste Management, picked up $700. SPX picked up $440. Yesterday's trade expired worthless for a $480 profit. We crushed the market by 7% this month. This is how you beat the market. We're not going to crush the market every single month by 7%, but as you can see, slowly but surely, you pick up credits. You also do ratio spreads, so that way you can participate in the upside or the downside of a stock. You can also take ownership if you so desire. And utilizing multiple strategies is the best way to be consistently profitable and to beat the S&P 500 consistently. If you have any questions, then you can email me or fill out the contact form on the website. I highly recommend enrolling in the trade alerts at beststockstrategy.com/memberships. Also, I'm splitting up the course between a large account and a small account options trading course. So if you want a great value, then I also recommend enrolling in the existing course, because the existing course forms the foundation for what the new courses will be, and it's also an amazing value.